то один, то второй, то один, то второй. Поэтому...
Возможно.
Okay, it's 9:15. Are we opening the session?
Yes.
Well, welcome to everybody. It's my pleasure and privilege to open the honorary presentation by Apurva Sangi. The subject of his presentation is deepening the country's integration in the global economy. Apurva is the World Bank lead economist on the Russian economy. And I'm glad also to introduce the discussant for this session, Abdulaziz Erumban. Abdulaziz is professor of the Groningen University and senior economist of the conference board. Right? Now, Apurva, just a few words. Looking back, Apurva has a long series of prominent economists who kept this position of lead economist on Russia. To name just a few of them, I would mention Brian Pinta, then Christoph Rühl, then John Litvak, then Željko Bagetic, and all of them contributed very much to our understanding of fundamental properties of Russian economy and to our understanding of Russian economic trends, both by the research, by the analysis, in particular reflected in the annual Russian economic surveys. And Apurva definitely keeps the World Bank brand high. And I would say Apurva has gorgeous feeling for the most important problems of our economy. In particular, I highly appreciate his papers on potential growth of Russian economy, on informal employment in Russia. Today's subject is definitely also of top importance for our development because now no economy in the world gains success without deep integration in the global economy. So this is one of the critical issues for us. Our plan is to give Apurva floor for 40 to 50 minutes. Then you can send questions if you have any by chat. And I will give the floor to Abdulaziz for comments. After that, Apurva and maybe Abdulaziz will answer your questions, and then we'll have discussion. Please, Apurva, the floor is yours.
Thank you very much, Dr. Gurvich. It's a pleasure to be here first and foremost, and it's a pity that we cannot be in the same room, but things are what they are, and we are human beings. We all adapt and adjust. Let me just say you mentioned a list of illustrious economists before me, and I try my best to keep up with them. They are big shoes to fill. But one reason I think the World Bank has been impactful in Russia is precisely because we are able to partner and exchange information and knowledge with institutions such as Higher School of Economics. And it's such a pleasure and privilege to interact with experts like yourself, who really are the true experts of the Russian economy. We bring in a slightly different outsider perspective, and that's our value added. And I think the strength of the two matching and merging with each other is what really counts. So with that, let me again thank you for inviting me to give this lecture. It's really such a pleasure. So I'm going to share my screen, and hopefully the technology should work. And so I hope my screen is visible. Okay, great. There's a slight echo in that I can hear myself, but I'll just ignore that. So before I talk about global value chains, let me just one caveat. The bulk of the analysis we did for this report was it took us about a year and a half to do it. Most of it was done pre-COVID. Although the lessons that we and the findings and conclusions we have are still very relevant, I just wanted to let our audience know, and also because of data limitations, we don't have the analysis say from the last 6 to 8 months. Although I will say a few words as we conclude towards the end on how COVID affects the current findings. Now, let me just say a few words on why are GVCs important. GVCs meaning global value chains. And the first reason and most important reason is that increased GVC participation promotes diversification and economic growth. So that's true world over. The World Bank did the World Development Report on this about 2 years back. So that finding comes out loud and clear. And second, participation of GVCs in GVCs magnifies gains of traditional trade. So these are so I just wanted to set the context of why are we even talking of GVCs. And in the Russian context, further integration into global value chains would be an important step towards achieving Russia's national goals. So both from a global context and a country context, deeper integration of Russia into global and regional value chains is thereby important. So let me just say that for the most part, since the early 2000s, as Dr. Russia's growth has been supported by sizable investment, rising consumption, and through greater openness and external orientation of its manufacturing sector. Yet, Russia is not fully integrated into global value chains, into trade and the global FDI network. So there is a lot of untapped potential. And it's worth pointing out that its four fundamentals endowments, market size, geography, and the quality of institutions that determine any country's GVC integration, and Russia is no different. So Russia is blessed with endowments, good endowments, with a very good market size, with geography that which is mixed in the sense that the geography is very variable, especially the economic geography, and the quality of institutions. Well, Russia has definitely made some progress, but there's a lot more to go on that front. Now, let me this slide shows that Russia has high sectoral concentration, particularly in mining and commodity intensive manufacturing exports, and its research endowments basically dominate trade patterns. Russia's relative comparative advantage, that is the relative advantage of Russia as evidenced by trade flows, is concentrated in oil and gas products, agriculture and forestry, and metals. So as a result, Russia's share of manufacturing exports is about 3 times less than the world's average, with goods exports far dominating services exports. And research endowments dominate not only trade patterns, but also inward FDI stock. And FDI clearly is important for deeper integration into GVCs, but Russia's FDI, which is largely driven by its natural resource endowments. That's the figure A that you see on your screen. 1/5 of Russia's inward FDI stock is in mining industries, for example. And figure B that you see is shows that Russia's FDI originates more from tax havens than compared to other countries. So So this is a point I'll come back to later. And it's also worth pointing out that sanctions, the economic sanctions of 2014 in recent years have led to a low FDI trajectory in general. Now, while we run this is some network analysis that we did, and we found that Russia is currently a second tier node, occupies a second tier node in the global GVC network, and dominating the networks of fuel and iron ore, for example, but playing a much more peripheral role in others. And the network analysis that we did finds, as you can see from the figure, that the US, the UK, China, Germany, France, Canada stand out as much more dominant nodes of the real FDI network, whereas Russia stands in the mid-range. The point is, while Russia occupies an important position, say, in the European FDI network, there is untapped potential to expand its role globally. Now, this next slide is interesting in the sense that this shows that sectoral specialization in commodities explains patterns of low backward and high forward participation in GVCs, which is actually typical for commodity exporters. Now, what do I mean by backward participation? So backward participation in value chains, basically one indicator of that is the share of foreign value added in exports. And in the case of Russia, so the high share of foreign value added in exports allows a country to import necessary know-how and technology in form of imported inputs to be able to produce exported goods, components, and services. And what do I mean by forward GVC participation? Well, high forward GVC participation reflects that a country is exporting more intermediate goods and services used for other countries' exports. So as you can see from this figure, 30% of Russia's exports are embodied in foreign country exports, representing the highest share among comparator countries. So forward participation is higher in Russia compared to its comparators, but backward participation is much lower. So one interpretation is that Russia is not there is untapped potential in benefiting from necessary know-how uh, in forms of high tech. Slide 7. By the way, I have a total of about 18 slides, so this is slide 7. This shows that Russia's overall potential for economic upgrading has actually increased. And by yeah, so we came up with this phrase economic upgrading, this metric rather, economic upgrading, which measures how close are total goods exports, how closer are they moving to final demand. So in the case of Russia, we found that total goods exports are indeed moving closer to final demand, and imports are moving slightly upstream. So that is a good thing. But there remains scope for more domestic transformation in chemicals and metals in particular, compared to Russia's comparators. Backward participation, as I mentioned in the previous figure, has been expanding but remains low. And at the same time, even though Russia has a high share of forward participation, it has declined. Now, this is a point that I really want to underscore and came out loud and clear from our analysis and findings, that the services sector has become an important driver of increased GVC participation. And the green bars that you see are basically the services sector. So this is an important point. Services in Russia are growing. Um, But compared to its peers, manufacturing in Russia relies most strongly on traditional services inputs and less on modern services. So for example, in manufacturing, domestically supplied modern services such as business services, ICT, financial services make up for only 22% of services inputs in the case of Russia, significantly lower than its peers. And one point we make is that the services sector provides opportunities for increased participation and upgrading, especially in the area of modern services. So with these, I'm not going into detail of all the findings, and that you can look at in the report. It says it's a pretty dense and comprehensive report. I just wanted to give you a flavor of the key highlights of these findings. And then the question we asked is, well, what would it take for Russia to deepen its involvement, its integration into global value chains? And we come up with reforms in three areas. So the first is enhancing trade policy reforms to reduce trade costs. The second is amplifying the role of both domestic and traded services in the economy, something we called servicification. And third is facilitating FDI and spillovers into the local economy. So for the other half of my presentation, I want to go over these three areas one by one, and really sort of dig into what can Russia do differently in terms of each of these three areas. So on the first, trade policy, it's worth remembering that Russia's economic success or successes rather have resulted from embracing greater openness, including becoming a member of the WTO in 2012. And as Professor Gurvich mentioned, no country has developed without actually integrating into the global economy to some degree or the other. And in the case of Russia, after it became a WTO member, import tariffs on manufactured and primary goods fell sharply since then, which are the yellow lines that you see on the screen. However, while such tariffs are lower than in India and China, for example, they are still twice as high in Russia compared to those imposed in the EU, the US, and especially Turkey. So this highlights room for further tariff reductions in Russia. But this is just import tariffs on goods. There is also this big question of non-tariff barriers, or as we call in the trade, NTBs. So the point we make here is that it's important to reduce tariff barriers, but equally importantly, Russia has to reduce non-tariff barriers to promote participation and upgrading in GVCs. So for example, exports in Russia are subject to lengthy documentary and border compliance procedures. This translates into significantly higher costs as seen from the dark green peaks in this figure. So to give you a very granular example, a standardized container of goods, for a standardized container of goods, Russia's cost to export is 580 US dollars and cost to import 520 US dollars versus say China's $125. So cost to import in Russia is $520 versus India's US $266. So this is an important point to make, that it's also non-tariff barriers. Now, the other point we make in the report is that Russia also needs to be cautious of policies that discriminate against foreign imports, that is import substitution, which it has been expanding since 2014. Call it localization, call it import substitution, but the results have actually been mixed. So for example, while there have been some areas of modest growth, notably in agricultural exports, the policy of import substitution has come at the cost of higher food prices for Russian consumers. In fact, one very nice and important study we cite in the report was done by HSC, and this HSC study estimated hearing a big echo here. Can people hear me?
Yes, Apurva, we can hear you.
Okay, great. So this HSE study actually estimated consumer losses of about 2,000 rubles per year for each Russian citizen. Not only that, it found that as a policy, as a result of this policy, these losses were actually the gains were transferred to Russian producers and not Russian consumers. They lose 2,000 rubles per year on average, and non-sanctioned importers such as Belarus. So the true beneficiaries of these import substitution policies are actually Russian producers and non-sanctioned importers such as Belarus. So that's the first area, first area which is on trade policy. So to summarize, important to reduce tariff barriers, but also important to reduce non-tariff barriers, and really take a hard, objective look at whether import substitution has been working or not. And the preliminary results show that the results have been mixed at best. So in the second area of what we call servicification, right? So the point we make here is that while modern services such as financial services, business services, ICT services have indeed witnessed dynamic growth in Russia, Russia's services exports remain concentrated in traditional services, notably transport and travel, which accounted for more than half of all total service exports in 2018, suggesting room to grow. So if so, why aren't services growing even more so in Russia? Why don't we see more services exports? And here we find that Russia is quite services trade restrictive. So trade and services in Russia is currently held back by significant restrictive policies. So to give you a concrete example, if you think of digitalization, which is a big thing, which is a big policy plank of the government, even though Russia has made good progress in digital transformation, according to the OECD, it remains the sixth most restrictive economy in
большое
digital
сделать
services,
усилия и
service
большой рост
computing.
будет, то все равно она будет шестая экономика мира.
In computer services, there are relatively high restrictions on foreign entry, as well as cumbersome regulations for the hiring of foreign professionals, including intra-corporate transferees and independent and contractual service suppliers. Now, again, the point is that while many of these restrictions were designed to help Russia compete with foreign suppliers, the actual result has been the opposite. Even the most dynamic Russian firms struggle to bring in foreign expertise that could transfer skills to the Russian counterparts, which leaves them less able to compete against firms from the EU, US, India, and so on. So the point is that barriers to services trade have to be removed. And by the way, I'm not going to go into detail in the presentation, but in the report, we have a very granular analysis of by sector, where and what these services barriers are. So, for example, in transport and in pharmaceuticals and others, and we talk about what can be done to remove them. And finally, the third area is FDI, which can act as a catalyst for Russia's GVC upgrading. And how do we do that? So there are some interesting findings we unearthed in our year and a half worth of analysis on this topic. So the first is that in general in Russia, multinational corporations, MNCs, do invest more in fixed capital. They are larger and more productive. And even after controlling for capital intensity, their labor productivity is twice as high as that of Russian firms. And this suggests that MNCs do indeed bring better management and improved processes and technologies. MNCs are also more successful in tapping into GVCs than Russian firms. So they do indeed act as a catalyst for Russia's GVC upgrading. But there is this question of to what extent do local firms benefit, if at all, from FDI spillovers? And this is a really interesting finding. And we found that the answer to that question depends significantly on whether the industry is competitive or not. So productivity spillovers from foreign to domestic firms are positive in competitive markets. So let me emphasize that. So spillovers from MNCs to Russian firms are positive in competitive markets. So we found that a 10 percentage point increase in the output share of MNCs is associated with a 3% rise in the labor productivity of Russian firms in the same industries. But which is a left figure, which is the first figure you see on your screen for two different models, right? But spillovers are negative for firms in uncompetitive markets. which is the figure you see on the right side. And the magnitude of the impact is larger than on average. The same change in the share of MNCs will lead to a 4% decline in productivity. So the point here is that MNCs are larger and productive. They do create positive spillovers, but only in competitive industries where degree of competition is high. So in order for Russian firms to benefit from FDI spillovers, is really a question of them becoming more competitive domestically. Right? Now, I do want to say, since we're on the topic of FDI, at the beginning of my talk, I had mentioned that sanctions have led to a low FDI trajectory. Now, while that is true, there are measures that Russia can take to boost FDI. So it's not only about sanctions and the external environment. There are a lot of steps that Russia can take within that can actually help boost FDI. And one example is Russia's complex legal framework, which includes the foreign investment law, the strategic investment law, the new investment law, and in our very detailed regulatory and institutional analysis of FDI barriers, we found that one consolidated investment law that clarifies the institutional framework, investment entry, protection rules would be simpler and clearer for investors. We also found that Russia has a high number of investor-state disputes, 26 of which are publicly known. So Russia becoming a full contracting state to ICSID, which is the International Center for Settlement of Investment Disputes, would help this situation. Now, let me just conclude with my final slide, which is, how does COVID change all this? As I mentioned, most of this analysis was done pre-COVID. And so a couple of points I'd like to make here. So COVID-19 has, of course, led to widespread disruptions in GVCs. But the point we make is, even though there's a backlash against globalization, global value chains are not going to disappear. They are instead going to reappear in different ways and places, namely through reshoring and regionalization. And COVID-19 and the current crisis may catalyze supply chain changes that were already underway. So nearshoring and regionalization of supply and production networks, more extensive digitalization, and more sustainable and resilient production networks and practices. So the point is that COVID-19 has reinforced and accelerated changes in GVCs that were already underway, but Russia needs to position itself in this context. So rethinking in relation to GVCs, there are opportunities for countries such as Russia, which is close to major markets. It can benefit from possible nearshoring and has both competitive advantages in relevant sectors, especially in digitalization and modern services, provided that some of these barriers can be removed, and conducive trade and business environment. And that's my last slide, but let me just end with one point, which is, in this report, we asked ourselves, well, which countries can actually be used as a template of sorts for Russia to follow in its path towards deeper integration into GVCs, especially given the current climate. And we found that while there may be no close comparators for Russia, each country is unique. Russia is definitely unique. Countries such as Canada and Australia do provide examples of the trajectory that Russia could take. And let me just say a few words on Canada and Australia and the journey they have traversed. So Canada's economy modernized after the First World War. Its focus shifted increasingly from farming to industry and services, and from rural to urban. But the interesting thing is, while in the early 1980s, Canada's main export sectors consisted of minerals and metals, by the early 90s, the automobile industry had emerged as a leading sector. In addition, new sectors emerged, specifically pulp and paper, as well as hydroelectricity. And fast forwarding to 2015, Canada's export structure shows a much balanced distribution between commodities, manufacturing, and services. Likewise, in the case of Australia, since the early 20th century, the structure of the Australian economy has gradually shifted away from agriculture and basic manufacturing towards services, with the mining industry growing in importance relatively recently. So let me just say that it is possible. What we are proposing is not is doable, and there are countries out there, there are examples out there that can actually provide some lessons of experience. So with that, let me end here and give the floor back to the moderators. Just give me 1 second, please. Yes, does that work? Okay, great. I will mute myself now and over to Professor.
Which you have to unmute.
Thank you. Thank you very much, Apurva, for your insights from your presentation. It's very interesting. And now I will give floor to Abdulaziz for a discussion. Please, Abdulaziz, the floor is yours.
Can you see my slides now? Okay. Good morning, everybody, and thank you very much for inviting me to discuss this paper, which I found very interesting. And it's a very highly pleasure to be part of this. And I really take this opportunity to thank Ilya for inviting me, and also Kavich and Apurva and all the participants here today. Just one correction, actually, I'm no more a senior economist at the conference board. I left the conference board last year, and I still continue there as a senior fellow, but now I'm fully at the University of Groningen. This paper, this report, it's a very rich and large report, extensive 200-page report that deals with, I would say, three main things, in my opinion, which are very interesting to me: the structural change, global value chain, and productivity. And Apurva rightly concluded how structural change have really helped countries like Australia and Canada in a more growth enhancing way, how they have helped these economies to transform themselves and achieve faster economic growth and better living standards, and how Russia can learn from them. And the second issue is global value chain. I will come to that, and productivity. And of course, the paper also have discussed a lot of issues related to trade policies and FDI and so on. But I will primarily focus on global value chain and productivity perspectives. Two things actually within the 15 minutes I have. The report, I think much of the presentation today focused on the executive summary and the global value chain perspective, which basically comes out, brings out a lot of issues in the sense that it says that it speaks about how Russia have achieved its economic growth after joining the WTO and with all the policies, and how potential output is shrinking. What are the reasons for that? One of the reasons which the report highlights is the weakening in productivity and falling labor force. Falling labor force is a general problem in many of the Western economies also, where we have seen the biggest challenge in the next decade or so is going to be the falling workforce. And also the over-reliance of Russia on natural resources. And I also found the chapter 3, which is the role of service sector, which is very well laid out in the report, which is of particular importance and relevance in the current context, especially. I will talk about a little bit in a minute. I have to admit that I did not read the complete report within the limited time I had. It is a 200-page report, but I primarily focused a little bit on the global value chain part, and then flipped over the other parts of the paper. So, of course, there are some suggestions that comes out of the paper, which Apurva have already discussed. which is basically related to trade policies, the need to strengthen the integration into GVC and diversification, and also deepening GVC in the manufacturing. And finally, the most important thing, I think, which I would discuss a little bit more on, is the service globalization and the importance of foreign direct investments, which is, I would say, in a way related to the first 2 points, because trade policies and GVC integration also have a lot of elements in terms of foreign direct investment, opening up of the foreign direct investment. So let me start with the issue of productivity, because productivity is a big challenge for Russia. I think I have been hearing about this challenge for productivity for a long time, ever since I met Ilya in Groningen, because he was a PhD student in Groningen, and then we had quite some time, a lot of discussion about how productivity has been a challenge in Russia. And this still continues to be a big challenge for Russia. And I think Russian policymakers still need to really understand why productivity remains a big challenge for Russia. And I really found Ilya's recent paper in a review of economic income and wealth in 2020, which really brings out an interesting perspective here, which is the informalization of Russian economy. And I think Apurva also has done some work on informalization, and I have done some work on India in this context, actually. And informalization of the economy really, stays as a drag on labor productivity in many of these countries' emerging market economies. And I understand that Russia is not an exception in this context. So this is a chart which I borrowed from Ilya's paper, where you can really see on the left-hand side the share of informal sector jobs. And you can see that it is actually increasing over the years. And on the right-hand side, you see the relative level of productivity in the informal sector compared to formal sector. You really see that in general, the informal sector productivity is less than 20% of the formal sector productivity, and especially in the market economy, which is the last at the bottom here. You really see in which more than 40% of employees are in the informal sector, labor productivity is less than 20%. This is really a huge problem for Russian economy. So I think this has also an important implication for GVC participation. I don't know actually how informal sector is actually contributing and participating in the global value chain in the Russian case. This may be an important thing to be looked into, and how perhaps the one lesson which we have learned from India, for example, is that modernization of informal sector can really help this process, which we have found, for example, within the informal sector, firms and plants which have high capital deepening and capital intensity and modernization have participated more in the global value chain, and also have been in a formal sector have been outsourcing a lot of activities into such sectors, and through that process they have been participating in the global value chain better. So the significance of two aspects here. The first is that the significance of this informalization for productivity in general, which we have some information right now, and the implication of that for global value chain participation in the Russian economy. So this may be an important aspect which policymakers have to look into. The second thing is, of course, Apurva has indicated, and also this report talks about the importance of manufacturing and the deepening of manufacturing activities for further GVC participation and integration. So I really want to pose this as a general question. Actually, basically, does manufacturing really offer a future for Russia's GVC integration? I want to pose this question from the wider perspective of what is really happening to global manufacturing trade and integration. So this chart, basically, I have updated from a blog which I myself and one of my previous colleague Adishu have written in the Brookings Institution's blog, actually. So the yellow line, which is the trade GDP ratio, it's not GVC or anything. It's simply the trade GDP ratio in the global economy in services. And the blue line is the trade GDP ratio in manufacturing. The dotted lines are for Russia, the same picture, but the solid lines are for the global economy. And as you can see, the manufacturing trade GDP ratio has been falling consistently, even though, I mean, it's not a substantial or steep decline. It has been consistently falling since the global financial crisis. Of course, there has been an uptick immediately after the financial crisis, but it has been consistently declining. A number of explanations have been put forward here. The rising populism around the world, which we see that it is happening politically, the trade war and anti-globalization sentiments in the Western economies, Brexit, all those kind of things. But one important thing, which is also very important in this context, is the changing technology in the manufacturing sector. We have at the conference board did a very detailed study on this actually. Basically looking into macroeconomic data at the global using global value chain, but also a lot of microeconomic data consisting of firm surveys and so on. What we found is that something which Apurva was also earlier mentioning, reshoring and nearshoring has been happening significantly. Many companies are bringing back their production plants to near to their consumers, and many companies are bringing back their production from emerging market economies to advanced economies back in terms, because to protect their IPR and also kind of actually they're compromising on efficiency, but taking a lot of other sentiments, including the rising populism and all these kind of political issues. So there has been something happening, and it is happening maybe at a granular scale, but it is really happening. And finally, there is COVID-19. I will explain what COVID-19 is going to do into this process. But on the other hand, service globalization, which is still very small. I mean, as a percentage of total GDP, service sector is still less than 15%, but it has been consistently increasing. And that increase continues even after the global financial crisis. So there is a kind of divergence in the trend in the global integration between manufacturing and services. This has to be taken into account while we talk about the importance of or continued focus on manufacturing in terms of global value integration. And this is also a picture. Again, this is an old picture. This is only until 2016 data. This is basically the foreign share of foreign value added in domestic output in the manufacturing. Again, it shows you a completely similar picture since the global financial crisis, consistently declining, which is again, as I said, it's partly a result of companies are increasingly compromising on efficiency and giving more importance to resilience, flexibility, and self-reliance. And self-reliance have become more increasing catchword for many countries. For example, in United States, in many India, and all these countries are becoming increasingly talking about self-reliance. And all these things are happening now. Reshoring is accelerating. And finally, we have the COVID-19. And I think COVID-19 is going to accelerate this process further, primarily because countries will try to avoid their exposure to external vulnerabilities in terms of economic indicators and also in terms of many health sector related products and so on. So I think also many populist policies and politicians might use this opportunity to boost their arguments against globalization, and which might make it hard for companies to tackle this all the trade barriers which might come back again. And we have been seeing it happening slowly. So there is a lot of challenge for manufacturing trade in going forward. But on the other hand, you see that this is again the ratio of services value chain to manufacturing value chain, and you really see that has been consistently increasing. So the upward movement for services again can further extend and more increase going forward in terms of service sector. So this is not a new idea. The potential for service sector has already been argued by in a 2016 book by Richard Baldwin, very clearly laid out. because there are many service sector activities which can be increasingly tradable now compared to what Balassa, Samuelson, and all these people were arguing in the past about how manufacturing is more tradable than services. That is not completely relevant anymore. Many activities like ICT services, financial services, insurance, professional, medical services, and all these services which constitute a larger portion of advanced economies output and employment can be traded now, and they are also contributing a large part of production and employment in many economies. So that is going to accelerate and provide more avenues for service globalization in going forward. And then three other points I want to say is that since 2000s, actually early 2000s, we have seen this increasing fragmentation of production that was facilitated by a lot of technology like ICT and so on. And it is also the same technologies like robotics and the ability of companies to automate routine jobs and things like that, that is now facilitating reshoring of production back to home countries. But these same technologies will also facilitate increased globalization of services. For example, a doctor in India can provide medical services in the Netherlands now. And that will accelerate now in going forward, and the same technologies will facilitate the increased integration of services activities. And the other important thing, I think, which is also discussed and touched upon in the report, is tariffs and non-tariff barriers and so on. Trade and services may be less amenable to direct policy restrictions, because when we talk to business people, while I was at the conference board, one thing which we learned is that businesses have their own ways to address and tackle restrictions within the service trade, because service trade is more intangible compared to tangible movement of tradable goods. So tradable goods are more amenable to tariff and non-tariff barriers, and companies can escape or tackle some of these barriers more easily in the services sector. And thirdly, as I said earlier, if the political forces are continued to increase against fragmentation of manufacturing, I think the manufacturing sector in the advanced economies will become more and more relying on imported business services. So this would also create more and more opportunities to emerging market economies to focus and participate in the global value chain in business services. Of course, countries which are investing in human capital and at the forefront of digital transformation and technologies will be the beneficiaries of this transformation in the initial stages. So there are the three opportunities, three reasons why I would still believe that COVID-19 and post-COVID-19 period will see more service globalization in going forward. And of course, this is not something which I wanted to mention specifically. You all know what is happening. We are all using increasingly all the technologies now after the COVID-19, video conferencing, telemarketing, and all these things. E-commerce is going up, and also activities are moving to suburbs and villages, especially in the advanced economies, reducing the importance of urbanization, and all these kind of things are happening. So this will also be continue, because the thing is that in a recent survey, again done by Conference Board, companies have expressed that they are expecting in the post-COVID period 55% reduction in business travels. So they think that they were actually wasting a lot of money in terms of business travel. They could do a lot of businesses without traveling. So the airline industry and the hospitality industry will be suffering from that. So all these changes will be continuing even after the post-COVID, because companies are realizing the potential of this technology and how they can tackle and how they can tap the the advantage of this technology into their production process, so which will facilitate service globalization. So from that perspective, I just wanted to put it as a general question or comments actually. So the first is that the increased trade and GVC participation will definitely improve efficiency and scale economies. Theoretically, there is no doubt about it. it also, because we also learned recently that it also reduces inventories of essentials, which might again push politicians continue their restrictions on trade and things like that. So given already declining globalization trend and the current COVID situation, which will stimulate that process, we have to ask ourselves, does the traditional type of manufacturing GVC has great potential, or countries like Russia and India also, for example, should be exploring services potential more, which is also one aspect of this report, which I really liked actually. The second thing is that what are the strategies countries like Russia should adopt in order to stimulate productivity and reduce informalization of the economy? Perhaps investing in and adopting new technologies, which Apurva has indicated, digital transformation, for example, to create smart and productive jobs, and also including in tradable services by accelerating digital transformation, relaxing trade policies, removing barriers to several services industries, and all these things, which is also part of this recommendation of this report. These are very important, I think, and this is also a wider a set of questions which the Russian policymakers have to consider in general. So I think in general, I think this is a very interesting report which has a lot of lessons for Russian economy. And what I try to do is that I try to provide a bigger picture and perspective in the context of this report. Thank you very much. Which I think you have to unmute again because your mic is mute.
Okay, thank you very much, Abdulaziz. It was very important to add a view of the global trends and patterns of international trade. Now I invite everybody to write your questions to our discussions, and we will forward questions to them. Now, maybe then, in expectation of these questions from participants, I would start the session. I have questions to both Apurva and Abdulaziz. What is your view of sectors of Russian economy that have the largest potential of deeper integration into GVS? Then maybe it will be interesting to compare the view by Apurva looking from the Russian economy and the view by Abdulaziz looking from global situation.
Thank you, Professor Gurvich. So let me answer your question while also referring to one of the first points that Abdulaziz had mentioned, which is, what is the possible role of manufacturing going forward in GVCs? Now, it's clear that at least in the short term, especially because of the pandemic and the current crisis, and that has taken a hit. But one of the points we make in the report, and which will answer your question, Professor Gurvich, is that Russia clearly has an added advantage in commodities and chemicals in that part of the value chain. But even in that part of the manufacturing value chain, Russia is not fully taking advantage. So let me give a specific example. Russia's, if you think of metals and chemicals, so metals is dominated in the case of Russia by manufacturers of basic metals such as aluminum, copper, nickel, etc. But we found that fabricated metal products such as parts, containers, structures, household articles play a really limited role. So my point is that even within Russia's comparative advantage of commodities and metal, that space, there is a lot more room for Russia to upgrade itself, add domestic value, and move from basic metals, say, for example, the fabricated metal. So that's one sector, if you will, that is really a low-hanging fruit. Now, coming to services, I think Russia has immense advantages for many reasons. in the spheres of tourism, education, and health. And these are three specific subsectors we discuss in detail in the report. There are other sectors as well. These are not exclusively, it's not exclusively these three, there are others as well. There's, we talk about supports and business support services for mining and other such subsectors. But the big things are the education, health, and tourism. So we identified these as three major sectors, services sectors that Russia has a latent advantage in. But we also say that it depends a lot on upskilling. So making sure that Russia has the right skills. And that's a different discussion altogether about higher education and vocational training and so on and so forth. But in order for Russia to position itself to take advantage of uh, these services sectors, skills, the right kind of skills are really important. So let me stop there and give the floor back to you. Thanks.
Thank you, Professor Gurvich and Apurva. This is a very interesting question, and I will look at this question again from a global perspective. First is that I think the importance of, as Apurva rightly said, the importance of commodities will remain. And I understand that Russia still have a lot of potential to tap that aspect. The reason why I say that the importance of commodities will remain is that because commodities are in a way natural endowments, and reshoring is least possible in the case of commodities compared to other types of manufacturing activities. Like you can reshore food processing or technological computer production or whatever things like that, but reshoring of commodities sector is least possible. And I'm not an expert on Russian economy, but I think what I learned from this report and also from what Apurva has been saying is that Russia has still not completely tapped its potential in the commodity sector, and in its ability to integrate with the global value chain in that segment is still enormous. And maybe Russia has to focus more on that, along with the global service globalization and tapping the potential in the service integration in the global value chain. So that would be my take on your question about the commodity sector in the case of Russia.
Thank you. We have a question from Ilya Voskoboynikov. Maybe again to both speakers. Do transportation and logistics services have some potential? These sectors, as far as I see, are the key sectors put forward by the government as a potential source of additional exports. What do you think?
Yeah, I can give my quick take and then give the floor to Abdulaziz. So the good news is that when you look at Russia's relative comparative advantage, and thank you for the question, by the way, that Russia actually has an advantage in services, trade, and construction and transportation. So in fact, the country has been gaining market share, particularly in global exports of transport services and travel, which if you read the report, which account for large shares of Russia's services economy. So the short answer is yes, but then and also transportation and travel make up for over half of services exports. So just based on that alone, transportation and travel are absolutely critical for Russia to develop further. But then how do you develop transportation further in a large, spatially dispersed, climatically varied country such as Russia? I mean, that's a discussion. I think that's another discussion, and probably Professor Gurvich, you might have insights into this. But it's easier said than done, and this is where the tyranny of distance and climate and other kinds of endowments that Abdulaziz was mentioning to come into play. But the short answer is absolutely. Transportation and travel are indeed important. Over to you, Abdulaziz.
Yeah, so I think I would also agree with that. I think I will not dismiss the importance of those sectors completely. Perhaps they are also important in creating jobs in the local economy, right? Because I don't know how much transportation and logistics services create jobs in the Russian economy. But I think two questions Russian policymakers and researchers may wanted to consider when you look at this question is that first is that whether it is a high value added sector, because compared to other services sector which you could focus on, and how much jobs it is creating compared to other sectors. The second thing is that can we complement the focus on logistic and transportation sector with more high value added services, more if you have to think ahead in terms of going forward. As I said earlier, some of the things which is likely to happen in going forward is that the integration of high skill services is going to happen more, and that will create more value and more productive jobs in the longer term. So alongside focusing on some of these services, you may also want to think about whether we can also complement the development of high skill services which can create more value and create more productive jobs. I think while I will not completely dismiss it, but I will also stress the importance of focusing on other type of services and exploring the possibilities of complementing along with the importance of this sector.
Can I just make one point, which is
Sure.
Russia specific? So the Russia specific point is in the report we discuss how in a survey of services firms, they flagged transportation as one of the main hurdles for improving both the quality and quantity of services. So that again speaks to how transportation is an important constraint. And let me give you a specific example. We found that demand for rail services in Russia is quite high. In fact, rail is one of the key mode of transport in Russia. If I'm not mistaken, Russia has the third largest rail network in the world. But repairs to Russia's extensive rail network are not keeping pace with wear and tear. So even though rail has a critical role in Russia's freight transportation, it's not keeping up. It's not keeping pace. And I go back to the point that Russia's transport network is huge, but remains unevenly distributed geographically. In another report we had done, which looked at spatial disparities within Russia, we actually quantified how each mode of transport could make a difference. And if a colleague who asked that question is really interested in this, I refer them to this particular report. Thanks.
Thank you. Well, the next question is, what policy measures could the Russian government suggest to stimulate skills-intensive services? Apurva, could you?
Yes, so I can take a quick crack at that question. Thanks. That's a very very broad question to ask, but let me conceptually answer it in two ways. So one is there's a horizontal set of measures that can be taken and vertical set of measures. So the horizontal set of measures is basically preparing your workforce for the 21st century. Okay. So what does that mean? Paying much more attention to 21st century skills. I mean, the future is already here. We're in the whatever fourth industrial revolution and so on and so forth. And since I have accumulated some Russia specific knowledge in my 5 odd years here, let me say that if you look at, for example, PISA scores of in the case of Russia does very well in math and reading and science. In fact, it punches above its weight compared to even some of its OECD peers. But the problem is when it comes to collaborative and problem-solving skills amongst Russian students and teamwork, for example. So there, Russia lags. It's behind its peers. So focusing on these softer skills, and this is a good example of a vertical measure, can really help Russia boost its modern services its exports. So that's sort of the horizontal measure, policy measure that Russia can take. Invest heavily upfront now in 21st century skills, because you're losing competitive advantage to many other countries out there in this area, focusing specifically on collaborative and problem solving skills. Now, and when it comes to vertical measures, and by vertical measures, I mean sector specific measures, I won't go into detail, but in the report we take, I don't know, 7-8 sectors from finance, ICT, transport, and others, and discuss specific barriers. But one common thread that emerges amongst these various sort of vertical subsectors or sectors is the lack of competition. So many of these sectors suffer from a lack of competition that withholds, that diminishes the contribution that services can make. So injecting more competition in these sectors, removing barriers to competition, reducing the monopoly aspects of operating in these sectors would be really helpful. So let me stop here and give the floor back to you.
Thank you. Abdulaziz, would you like to add something on this issue?
I don't have much to say, but I think I see two sides to this problem. The first is a supply side problem, and the second is a demand side problem. On the supply side, I think the policies, of course, can affect or influence the supply side. What kind of skills can be created and how well human capital can be improved and so on. One thing which I would really think, while I don't know the specific situation of Russia, but I think flexibility is very important in going forward. This flexibility of workers in adapting new skills, because technology is changing so rapidly. So continuous training programs and so on, actually in adopting the new skills, and flexibility is very important. The second thing is the demand side, which is more, okay, what the industries really need, what companies and economic activities in the economy and the sectors which we are focusing on, what do they really need, how rapidly their technologies are changing. So that has to be taken into account while devising the strategies on the supply side. So I think that often what happens is that the demand side is not taken into account while devising supply side policies, and that is the most important thing which you have to take into account.
Thank you. Apurva, you would like to add?
Yes. So no, I think that's a brilliant way of phrasing the problem, which is definitely applicable to Russia, that the supply side doesn't take into account the demand side. So I really appreciate that intervention by Abdulaziz. But just coming specifically to some of the vertical measures that I was talking about. So if you think of financial services in Russia, so the point we make in the report is that foreign capital and foreign quota limitations for the banking sector and insurance services in particular could be increased. So that's one concrete policy measure that the government can take. In insurance services, prohibitions on the establishment of foreign branches for the provision of non-life and life insurance could be relaxed. If you just think of tourism, we talk about how measures could include simplification of visa procedures and the way VAT is returned or refunded to foreign tourists. All these things can make a difference. And finally, let me just say on transport, this is an important point, and I keep going back to the rail example because rail freight is so important for a country like Russia. In rail services, the government could consider separating the infrastructure and services segments of RZD or RZD, or the Russian Railroad Agency. So these are, again, our report goes into more details, but these are some of, to give the person who asked a question a bit of a tangible flavor. These are specific policy measures that could be considered to be addressed. Thanks, Yves.
Thank you, Apurva. My next question is primarily to Apurva, but I would appreciate if Abdulaziz also would like to give his views. Apurva, in your presentation and in answering the previous question, you were talking about impediments and barriers and possible policies to support integration that are lying on the side of the government. But do you see any impediments, problems, and policies that to support integration that are lying on the side of companies?
That's a good question, and to be honest, we really didn't do that kind of an analysis because our perspective was more from a public policy perspective. But let me refer to in the very last chapter of the report, chapter 6, I believe, we did do a detailed legal and regulatory framework analysis of Russia. And in that context, we talked to a lot of companies, in particular foreign investors. In this case, our focus was on foreign investors. And the one thing they kept coming back to us on was this really complex, complicated institutional framework. So I know it's not directly answering the question that was asked. So I don't have an answer to what companies could do differently. But yeah. So let me just stop there.
I also don't have a lot of reflections on that, but I think one point which Apurva has also in his report is that the facilitation of foreign direct investment, which is again a government policy perspective, because that is very important also from the company's perspective. That creates some kind of, if you have limitations on and restrictions on movement of foreign capital, that can be an impediment for companies in actively or effectively participating in the value chain. So I think that may be an aspect. The other aspects, of course, which we have learned from other countries, not specifically from Russia, are again, digital transformation, the pace of digital transformation, which is being constrained by, appropriate skill, and maintaining and retaining, workers, and updating their skills and so on. So that has been a big challenge for companies in general. The human capital challenge has been very big for companies in the face of, rapidly changing technology. So that is another lesson which we learn from other countries in general.
Can I just so as I heard Abdulaziz talking and reflecting on the question and reflecting on my time here in Russia. So one thing that does come to mind that companies can actively do here in Russia, and it's not covered in the report, but it's just based on my reflections, is that they can be more proactive about providing their views, their perspectives, their inputs into the supply side of the equation. Abdulaziz mentioned there's a mismatch between demand and supply. So what do companies want? Can they influence the higher education or vocational education system agenda? So even though that's a public policy agenda, but companies can also play a role. They can also be more proactive in forging further links between industry and academia. Be more proactive about hiring, say fresh graduates, or deepening ties with institutions such as Kolkovo and others. So I think there is this interesting public-private or academic workplace interface where companies can step up and be more proactive.
Thank you. Now we have a question for Abdulaziz. Should we consider the informality expansion as the bad news for Russia's higher GVC participation?
Thank you, Professor Gurevich. And before answering that question, let me also reflect upon what Apurva just said. It's a very important point, actually, with this communication between private and sector and government. I mean, the supply side and demand side. But the question is that do we have such platforms in Russia which really facilitate such conversation? And that is something which is actually, there is a kind of, it's not unbridgeable divide, but there is a kind of gap often in some countries where, the communication, the right communication between the private sector and the government or the policymakers and the demand side is not happening. So there is a lack of platform. Whether there is such a platform, that is a question I don't know. Now coming to Ilya's question, actually, Ilya, you should be answering this question in the context of Russia rather than I answering that question. But I think my general take on this is that this is again my own understanding of Indian economy, on which I have worked considerably, and that informal sector has been acting as a drag on productivity in general, and the ability of informal sector, especially the very tiniest portion of informal sector, which constitute a larger portion within the informal sector, in participating in the global value chain, except in a few segments of the industries, like textiles, for example, have been very, very limited. And this is also because they often fail to keep the quality standards which multinational companies or foreign firms are aspiring to see. And that is why I said earlier, in a previous work, we have seen that within the informal sector, sectors which are using more capital, for example, capital intensity is high, in other words, more technology is using, they are better or well qualified to participate in the GVC, and they have been actively participating in the GVC. But their share in the total informal sector has been very tiny or limited in most of the sectors of the economy. So it is a very difficult question in terms of having a black and white answer. So it really depends upon, you really have to look into what is the structure and composition of the informal sector in the Russian economy, and then only we can really answer this question. But I think in my general understanding or general answer to the question would be, it is very likely that it will limit the ability of a sector in participating in the GVC in a highly very, very high manner. I think Abuva, you wanted to say something on this. You are raising your hand.
Yeah, but after Ilya, who's the expert here, in case he wants to come in, then I'll.
Okay, thank you. Basically, my question was just to get some ideas in what way informality could help. And Abdul commented on this. He said that taking into account the Indian experience, in some cases, informality contribute to GVC, but we should develop, we should understand better what sectors and what types of informality work for this. I keep in mind that if the Indian doctor can consult people in the Netherlands, I'm not quite sure that this Indian doctor will be formal. So he might be also informal, and from this perspective, this could also help. But anyway, this is an interesting dimension of the Russian ways of high-skilled, or Russian ways of the expansion of high-skilled intensive services. Actually, before this report, I didn't think on informality from this perspective, but from this point of view, well, this is very stimulating. Thank you very much.
So Ilya, I think before Apurva takes over, let me just, I think this is a very important point. I myself did not think about that distinction which you're making between manufacturing and services. I think the informality in manufacturing could be quite different from informality in the service sector. I think that has to be taken into account while looking into this question.
Yeah, so just a fascinating conversation. That was precisely the point I wanted to make, Ilya, that informality actually could be a plus in terms of deeper integration, at least in the context of some services. And it would make a absolutely fabulous research question down the road as to whether this hypothesis holds or not. But let me just say that I know Abdul is bringing in refers to the Indian informality example, but for the purposes of our viewers and anybody else who might listen to this talk down the road, I think informality in Russia is very different from informality in India. First of all, informality in Russia is not rural or agrarian, as is typically the case of informality in countries like India. And second, the informal in Russia, relatively speaking, are much better educated, have much better skills. So these are two really important differences. I'm not the first to bring this. In a project we did together with HSC, in which we had the privilege of working with Professor Gurvich and Professor Gimpelson. We did a deep dive into informality in Russia. And interestingly, we found that the main root cause of high and growing informality in Russia is not, so I repeat, is not the fact that Russian labor market regulations are overly onerous, or the tax benefit system encourages informality. None of those obvious things you might expect in other countries. But it was a lack of creation of formal jobs. Okay, so it's a bit paradoxical, because after doing this big research project, we found that the reason for informality is lack of formality. You know, but it's true, and it's a very, it was a very sophisticated analysis that all of us did, and it was, I learned so much about the way Russia works. And I really encourage others who are interested in this to take a look at it. To give you one small statistic, we found that over the last few years, the net number of jobs created by medium and large enterprises, formal jobs created by medium and large enterprises, was exactly 0. Right? So if the economy is not creating formal jobs, I mean, of course, people still need to work. Informality will rise. Okay, let me just stop there.
Thank you. And my next question is again to both speakers. Could you specify a couple of one or two, a couple of countries that could be taken as models for Russia's efforts to increase integration into global value chains, who demonstrated very successful achievements, very successful developments, and in this or that respect, the situation was similar to Russia's.
Right. Thanks. So I think I alluded to this in the in my presentation. So after we did this analysis, we asked ourselves that question: are we asking too much of Russian and Russian policymakers to go and integrate along these lines that we suggest? And the answer is not really, because the two most prominent examples of countries that have done so are Canada and Australia. Now, these are similar to Russia in terms of geography, in terms of the size of the country, in terms of climate as well. But these are two countries that have actually broken away from the resource curse, or from being overly reliant on commodities and chemicals, to diversify and to be successful examples of development writ large. So I won't repeat what I said in my presentation, but in the report we talk about what these countries did, and the lessons that Russia has, Russia can take from it. But yet the answer is it is possible, and these are two specific examples. In the case of Australia, we found that economic activity actually shifted towards the resource-rich states of Queensland and Western Australia, for example. Now, one does have to keep in mind the difference in the external environment today and between 80s, 90s, when globalization was at its heyday. So changes in structure of the economy have obviously play, and the external environment play a big role. Back then, East Asia was industrializing. There was a technical change afoot. So those things, of course, have changed. But I still remain optimistic that Russia, given the potential it has, can actually do it. Thanks.
Sure, but I'm sorry, I didn't specify my question better. You told mentioned Australia and Canada in your presentation, but their experience is already some 100 years old. And could you experience of recent decades, success stories of recent decades?
Yeah, so first of all, I don't think the experience is over 100 years. I mean, they started off for various reasons, a while back, but Canada and Australia up until the 2000s have actually been evolving along these lines. So listen, on the top of my head, no real comparator comes to mind that Russia can. I mean, there of course you can talk about small specialized economies, highly open economies such as Singapore and Hong Kong and whatnot, but then those are different for obvious reasons. So maybe let me just say this: maybe Russia can be the trendsetter, and Russia can be cited as an example 5 to 10 years from now, if Russia is able to do at least some of the things that we mentioned in the report.
That is precisely what
you.
I was also thinking, actually, because Russia can be an example rather than looking for an example, because it's not only it's 100 years old. I think any example you take, Canada or Australia, their institutional setting is quite different from that of Russia. That has to be taken into account. So I don't think that it is a good idea just look at some example and replicate that example in Russia, rather than that. What you need to understand is that in real terms, what is Russia? First you understand, and then what we could do in Russia. Just some of these points which we have been discussing earlier, in terms of stimulating its human capital and and integrating more with the service sector, globalization, and so on. And that could make Russia as an example for others, actually, in the short time span, rather than looking at an old history in this context, because we have changed a lot. And Russia's institutional setting, I reiterate, that is quite different from any country which you would take as an example, as a successful example, whether it is Australia or Canada or any other country. Actually, I often hear this question quite often. Actually, I was working on a project on GCC countries in the conference board, because these countries have different, again, natural resource endowment, oil reliance, and expat workforce, and so on. They always keep asking, is there a country that we can emulate and we can look at as an example? It is hard to find, I would say.
Thank you. Well, I don't see any more questions, hence we can conclude. Would you like to have some concluding remarks, Apurva?
Only concluding remark is I absolutely thoroughly enjoyed this discussion. I'm pleasantly surprised that virtual discussions can be this much fun and enlightening. Of course, the only thing I missed was not seeing our audience. But thanks, really to the audience for patiently sitting through this, posing such excellent questions. And I really hope, even though who knows where I may be next year, but because of this virtual conferencing, I get a chance to weigh in from some other perspective. I would love to be part of this going forward. So thank you very much to HSE for organizing it, and congratulations on such a great annual conference. You guys do a great job each year, and you keep building on your successes. So congratulations.
Thank you. Abdulaziz, would you like to say a few words as a concluding remarks?
Thank you, Professor Gavich. And again, it has been a very pleasing experience for me. And it also helps us to understand and reiterate that the service sector globalization is going to continue, because how the technology has been helping us to come together, which would have been maybe less, I mean, it would not have been impossible, but it was less feasible in the normal context otherwise. And again, I also congratulate on your annual conference. And again, I really enjoyed reading your report, Apurva, and it's an extensive and very important contribution, I think. And thank you, Ilya, Gervich, and Apurva, and all the participants for being here to listen to us. And it was a very interesting discussion. Thank you very much.
Thank you. And to conclude, I would first to express many thanks to the speakers, to Apurva Sangi for his brilliant presentation, and to Abdulaziz for his brilliant comments, discussion, and we all of us learned a lot of lessons, and we hope that our country will use your recommendations, your conclusions to deeper integrate into global economy, and in particular in the global value chains. Hopefully we will be good pupils. Thank you very much, and we conclude our session. Thank you.